I think that Bitcoin actually gets its value from our common understanding of what that value is as a society. Okay, and that's really, in essence, where I feel that it's got its value from. So in terms of a social construct, I think that Bitcoin can certainly be termed in those terms. So, and we need no further indicator of that other than to look at Google Trends. So if I take the Google Trends for Bitcoin and I overlay that over the price for exactly the same period. Okay, this is looking at 1 year of Bitcoin price, 1 year of Bitcoin trends. Okay, you can see there that there's a very real association or linkage between the social aspect of Bitcoin and its value. So what is driving this volatility? And to me, the primary driver of this volatility is really from a scarcity point of view. So if we think of this, and this is why I've got that picture up there of the lake, if we think of this as a liquidity lake, okay, the rainfall in the area is fairly consistent, and it's causing that lake to increase in size. And it'll increase in size by the current issuing rate of Bitcoin is 12.5 Bitcoin per 10 minutes. Okay, so every 10 minutes it's getting bigger by 12.5 Bitcoin. Every 4 years, incidentally, that 12.5 Bitcoin reduces by half. Okay, so we have Bitcoin halving day, okay, which occurs every 4 years, and that is when the issue of Bitcoin becomes more and more scarce. The valley in which this lake is located is only so big. Okay, Bitcoin is restricted to a total of 21 million coins. Okay, there will never be more than 21 million coins produced from Bitcoin. All of this is going towards scarcity. So you can see that there's a scarcity that is dictated by the size of the valley. There's a scarcity that is dictated by the fact that the issue of these coins is getting fewer and fewer and fewer. So the other thing that is governing the scarcity is the Gini coefficient. Okay, if we look, I'm sure that we all have an understanding of what the Gini coefficient bit is, but it basically has a value between 0 and 1. If you're talking at a value of 0, you've got perfect equality. If you're talking at a value of 1, you've got perfect inequality. The Gini coefficient for Bitcoin is sitting at 87% or 88%. Well, it's actually between those two. I found two reports. The one report said that it's at about 88%. The other one said that it's about 91%. Okay, there was a time discrepancy between the two, and the 0.915 is actually the more recent figure. So what's interesting there is that after the recent boom of people opening up Bitcoin wallets and people coming into the Bitcoin scene, you've actually seen that Gini coefficient get bigger. And that's basically because this number at the top of here that shares the 5% is getting bigger. Okay, it's very unlikely that the top 47 holders of Bitcoin have been selling. Okay, they own 30% of the Bitcoin in circulation. The next 900 basically own the next 20%. The next 10,000 own the next 25%. Okay, and they're about 100 million. So that means that 1% of the people have 95% of the Bitcoin in circulation. Okay, now what all of this has the effect of doing is decreasing the pool of the amount of Bitcoin that are out there to be traded at any one point in time. So this has an effect of taking that liquidity lake and making it a liquidity puddle. Okay, so that obviously will also drive up the price, and it also makes it non-linear in terms of the changes in price. So a small change in quantity can actually produce a rather large change in price. And from an economics point of view, we generally see this in the elasticity of the supply of those particular items.